Hello and welcome. In this video, we will learn about the reversal setups and continuation setups. Okay. In the first video, we had learnt about rally candles, drop candles, and base candles. Right? Rally candles are green candles wherein the size of the body is comparatively larger than the size of the wicks. Correct? Yes. Now, if you look at this candle, you can say that the buyers were in control of the price. Buyers took the price from this level because in green candles the opening price will be below, and they took the price from here to here and closed it here. So through their entire journey they kept on fighting, and at the end they won the battle against the sellers. Correct? So here too the price opened here, buyers pushed the price up, they went up, there was a slight selling pressure, sellers brought the price down, but still the buyers closed the price at a higher level when compared to opening price. If you look at this candle, you can say that buyers were in control of the price. Same goes for this and this. When we compare the size of the candles with the size of the wicks, we can say that the size of the candles are substantially bigger than that of wicks, and so these can also be considered as rally candles. Okay. The opposite is drop candles, meaning in drop candles, sellers are in control. If you look at this, the price opened here because in red candles, price opens above. The price opened here and the sellers kept on bringing the price down and they managed to close here. The buyers who were fighting the war against sellers did not stand a chance. So they lost the battle and the sellers won. So here too the sellers won, here too the sellers won, and here too the sellers won. When we compare the size of wicks with the bodies, we can notice that the size of bodies are substantially bigger than the size of wicks, and so these are considered as drop candles. In drop candles, sellers are in control of the price. Okay. Next is the base candles, where the color of the candle does not matter. Okay. And how do we decide if a candle is base candle or not? We decide it based on the size of the wicks. If the wicks are longer than the body or equal to the length of the body, then we consider it as a base candle. So in all these candles we have longer wicks. Alright? Yes. Now, considering drop candles, rally candles and base candles, we have 4 setups. 2 setups are reversal setups and 2 setups are continuation setups. Okay. Let us start with the reversal setups. I'll explain you the setups and give you some insights about market, and then throughout the video series we will learn how to use the setups. Okay. So first is a green candle or a rally candle. In the rally candle, the buyers are in control of the price. Then comes the base candle. Base candle can be of any color. in base candle, there is no proper winner. Here, the buyers were winners, but in base candles, there are no winners. Buyers are trying to push the price up, whereas sellers are trying to push the price down. There is a fight going on between buyers and sellers in the base candle. Okay, so base candle is indecision candle. Indecision candle, meaning there is no clear cut winner in this. After the base candle, we have a drop candle. Buyers took the price up. There was a fight between buyers and sellers, and finally the sellers won the battle and took the price down. So this is drop candle, and this setup is called as RBD setup or rally base drop setup. Alright, now this is a reversal setup. This is a reversal setup because the price was moving up and then there was a halt here, and then price reversed and started moving down. So this is a reversal setup. Alright, next we have the price coming down. Sellers are in control of the price. This is a drop candle, and then there is a fight between buyers and sellers, and so we have a base candle, and after the fight we have a winner who is buyer. Okay, so the buyers are the winners here because the buyers were able to take the price up. So this is also a reversal setup because initially the price was moving down. Sellers were in control, and then there was a fight between buyers and sellers, and then the buyers came out as winners because they were successful in taking the price up. So price came down and then it moved up. So this is a drop base rally setup or a DBR setup. Alright, so these two are reversal setups. Now coming to continuation setups, we have a rally candle. Buyers are in control of the price. Then we have a base candle. There is a fight between buyers and sellers, and then we have one more rally candle. Even though there was a fight between buyers and sellers, the buyers won the battle once again. So price was coming up, there was a halt here, the price continued to move up. Alright, so this is rally base rally setup or RBR setup. Next, we have a drop candle where the sellers are in control, and then we have a base candle where the buyers and sellers are fighting, and then the drop candle once again where the sellers are saying that they are winning the battle. Okay, so the price was coming down, then it halted, and then it continued to move down. So this is a continuation setup, a drop base drop setup or a DBD setup. Alright, yes, so these are the only 4 setups we will be using in this price action technique. Alright, now there can be multiple base candles in these setups, meaning if we consider an RBD setup, we have R candle here, and then there can be multiple B candles or base candles. Alright, in this case there are 3 candles. It can be 1, 2, 3, 4, 5. So it doesn't matter. Alright. What does beige candle signify? It signifies that there is a fight going on between buyers and sellers. Alright. So there is no problem if you have multiple beige candles. Okay. And then we have a drop candle here. If we consider drop beige rally candle, we have a drop candle, and in this case we have 3 beige candles and then a rally candle. So it can be multiple beige candles. If we have RBR candles or RBR setup, we can have multiple beige candles. And if we have a DBD setup, we can have multiple beige candles in between the drop candles. Alright, so you must remember this. Now, let me talk about reality. This is an image of human heart. My teacher showed me this image when I was in school and told me that this was an image of human heart. He told me about various parts of human heart and explained me the functionalities of it. And I too learned it and passed the exam. Okay? But now, when I look at a photo of a human heart, this is what I see. Okay? Now, I will close this for a minute because I do not want you to see this image. Can you imagine or can you relate this picture with the real picture which I just showed you? Is there any relation between the image that I saw in my childhood and whatever I am seeing in reality? No. Correct? This is what I saw, this is what I learned. And when I see a human heart, a real human heart now, I am not able to relate it with what I learned. This is exactly what happens in stock markets too. What I can teach you is theory. I will tell you that there are 2 reversal setups and 2 continuation setups. A drop based rally, rally based drop, rally based rally, drop based drop. 4 setups. That is the theory. That is like explaining this to you. And when you go and look at a chart, it looks something like this, which is entirely different from what I explain. So, what I explain will be different from what you see in the market. And it is only by your experience you will be able to recognize the patterns correctly. Alright? Now, I want to talk with you for a few minutes. The stock market is a zero-sum game, meaning if you are making profit in a trade, then someone else would be making a loss in the very same trade, or someone may be making less profit in the very same trade. Okay? And if you are making a loss in a trade, then it means someone is making a profit in the very same trade. So, stock market is a zero-sum game. In the stock market, there are big players and small players. And the aim of everyone is to make profit in the market. Does it work like that? Can everyone make profit in the market? No, it does not happen. Big players have better knowledge and resources than small players. And so, the big players will try everything they can to wipe out small players from the market. The reason I'm saying this is because if you search for price action videos on the internet or on the YouTube, you will get a lot of videos explaining you the concepts. For example, the concepts of candlestick and the chart patterns and whatnot, trend lines, etc. Do you think the big players do not know this? They know everything in the market. Big players know about all the patterns and they know where the small players will be entering a trade and where they will be placing their stop losses. So, what the big players do is they take out the stop losses of small players and then continue moving in whatever direction they have decided to move. And in recent days, it is called as SL hunting or stop loss hunting. Okay, big players want to make profit, and the only way they make profit is if someone else loses. And so, big players do not want the small players to win, and so they will do everything they can to make a strategy not work. The reason I'm saying this is because in this course, I may teach you some price action concepts that are working right now in the market. But if everyone starts using the same concepts in the future, then the big players would come to know this and will try to make the strategies not work. Alright? Now, I want you to think and answer a question. If you had known a secret strategy where you would be making guaranteed profit, would you be willing to reveal that strategy to anyone? Absolutely not. Correct? You would be keeping it a secret and you would be making profit from it. I have bought a lot of courses that have claimed to teach secret strategies to make money. And believe me that I have tried out all these strategies only to find out that they do not work well. Okay? If there is any working strategy, people do not reveal it anywhere, even in their courses. The strategy works only due to the experience of the trader. I am not here to review any courses. If you want to buy any courses, you are free to do so. But this is just my opinion. So, my suggestion is that use your knowledge of other videos that you have seen. Use the knowledge that you will be getting from my course and then observe the market. See if whatever has been learnt by you is working in the market. And it is only by observation you will gain the necessary experience required to enter a trade in the stock market. Alright? So, the things that I am going to explain in this video series may not work every single time because the big players do not care about the strategies. They create the charts. They want to win. So, try to understand what I am saying and then club it with whatever you have learned or whatever you will be learning in the future. And then I want you to succeed in the stock market. Alright? Yes. So this is it for this video. I'll see you in the next video. Till then, think of what I have taught in this video and try to find the reversal setups and continuation setups in charts. Alright?